Good afternoon and a warm welcome to everyone in the room to today's panel. It's a real pleasure to be here and moderating this important panel for today. And I also would like to give a big thank you to Ihsan and the CVC Bosphorus team for organizing such an important event, at the right time. And they are repeating this every year, and I was fortunate enough to attend every year since inception. And let me say they're raising the bar every year, so hopefully we're going to see even better things next year. So you should definitely come and join next year as well. In today's session, we're having this session at a particularly important junction moment of region. Across Turkey and the region, we're having an important developments and everything. We're seeing a transformation within the ecosystem. Innovation is funded and scaled, and even went to global coordination, everything we see in the global market. So capital is becoming more international, and founders are becoming even more ambitious from day one, and we're seeing even more innovation coming to the region. So it's a really exciting moment in time, but also we're seeing challenges, everything happening globally, not even in the region, but globally we're seeing a lot of things. So we're navigating real challenges. Today we're going to talk about this specific region, Eastern Europe and beyond, and we have esteemed speakers from the region. Before diving into the panel, I just want to introduce myself to begin with. I'm the CEO and board member of Turkey Development Fund. We are the venture capital investment arm of Development and Investment Bank of Turkey, which is the sole development finance institution of the country. So we're making venture capital investments, and we're doing this using three main channels. We're making direct investment into startups. We're making direct investments, again, SMEs in the form of growth equity investments. And finally, we're making fund of funds investments into VC and PE funds with a focus on Turkey. So all in all, we're managing 52 direct investments and 11 fund investments in total. So before further ado, I just want to give the floor to my speakers, and I just want to introduce yourselves in a brief 1 minute time, please.
Thank you.
Ercida, can I start with you?
Thank you very much. My name is Ercida Dokar. I'm a co-head of TMT team with EBRD. Obviously, most of you know EBRD. I'll just give a very short introduction. We operate in the region between Southeast Europe and Turkey for more than 20 years now. And we normally deploy around 15 to 17 billion euros across our countries of operations, with 6 billion going to the region, and Turkey definitely leading this with 3 billion deployed only in Turkey. We operate in many sectors, in infrastructure and corporates. Within corporates, we have manufacturing and services, real estate, and technology and telecommunication. And across these sectors, we deploy anything between Series B equity all the way to very large debt tickets. Very nice to be here, and I hope you have a great event.
Hello, everyone. My name is Bogdan Iordache. I'm a GP with Underline Ventures. We are a CE-centric fund. We invest in Eastern European founders at the earlier stages, pre-seed, seed stage, sometimes pre-product. We like to invest mostly in enterprise AI and real tech, which is a combination of all the verticals where software and atoms are coming together as industrial tech, energy, supply chain, defense, space, etc. I am based in Bucharest, and I run a $20 million fund, fully private, raised from mostly from the most successful founders from the region.
And I'm Michalis Stangos. I started and still am an entrepreneur before 24 years ago. My ecosystem journey started here in Istanbul back in 2011. It was a tough period for Greece, and a huge crisis was going on then. And I was an invitee by Endeavor Turkey, and I got inspired by how the ecosystem started to grow here. And I went back to Greece, created a non-profit organization, Industry Disruptors, that grew a lot in 64 countries, doing ecosystem building actually. And from that journey, I became an angel with more than 20 direct investments, a limited partner, and finally now I run a VC, seed plus, 1 to 3 million tickets, industry agnostic, digitalization megatrends, the focus. We see across the globe, but with either with a Greek angle. As we are backed by HTBI, we were looking for either Greek founders or for founders that they want to have a presence and grow in Greece and through Greece to Europe.
Great, thank you all. I would like to start from the broader regional picture before moving on to startups, micro things, investment behavior, and collaboration opportunities. So my first question will be for Arcida. Arcida, from EBRD's investment perspective across Turkey, Southeastern Europe, Greece, and the Western Balkans, how would you describe this region today, the current state of the region, I mean, and where do you see the strongest investment opportunities?
Thank you. That's a very good question and also a very difficult one to answer. I would probably focus on, what I know best, which is technology and telecommunications. So I look at a region from Istanbul through Western Balkans all the way to Bucharest with 150 million people, and which is under-digitized, but also under-invested if compared to European standards. Now, for a lot of people, this might sound like a weakness, but this is actually the white space, where the investable space, right? So all of these countries, but also the Western Balkan region, has very specific issues, strengths, and weaknesses. But if I would try to summarize, you have the Western Balkans, which has issues regarding the digitalization infrastructure in itself, and then on top of it, the layer. Then you have Romania and Turkey, where you have very strong talent already there. You have definitely certain depth of the market, with Turkey leading in terms of depth of market for sure. And then you also have strong digital infrastructure, which can be improved given the new wave of technology investments. So I would say, if anything, if we look at the region in itself, you would say, okay, these are the strengths, but what is investable is actually the white space. So there's definitely issues with digital adoption. So anything which increases productivity, innovation, digitalization of corporates in any sector, that would definitely be a space to invest. There's the layer of the digital infrastructure, and anything between, the normal fiber to towers and the old school business model in telecommunications, which seems boring, but is actually a very interesting proposition given the level of multiples and the valuations they're at now, and the level of carve-outs and value creation that they're subject to is actually another interesting space. A huge wave of interest in AI data centers in all countries, and I have to say, moving from FLAP-Ds, which is generally where AI data centers investments have gone to, if you move into our regions, you see wide availability of energy, you see very happy governments to accommodate these large investments. So this is definitely a region whereby there's a lot of interest from foreign investors, very large technology groups out of the US to invest in the digital infrastructure. The third theme, for sure, is the technology service layer in any vertical, meaning, e-commerce, fintech, supply chains, everything that can be disrupted from offline to online. It is actually very investable in our markets. I have to say, though, Turkey leads by far in terms of depth of the market, because it already has a very developed seed, VC growth, and stock exchange. without, of course, with issues, but from the other countries, I have to say Turkey is well ahead. And on top of all these layers that I described, what Turkey offers is momentum financing or momentum investing, which means it is a market whereby we already have seen unicorns, some decacorns. We have already seen companies going and exporting service to the US. We've seen that in Romania with UiPath as well. But in Turkey, the concentration is higher, the market is deeper. So probably, I would say, there are all the ingredients for an investable region.
Great, thank you. Great views from a late-stage investor. So now we have two early-stage investors with us. So Bogdan, I want to ask you, how do you read the current state of the early-stage ecosystem in Southeast and Eastern Europe? Do the numbers really point to a maturing market?
So one thing that I didn't mention, just to give a bit of context, is that I founded in Bucharest a conference called How to Web, which is the largest startup and investor conference in CE. And we're doing an annual report regarding venture investments in what we describe as extended Eastern Europe. That includes Turkey. So we've been looking at the numbers very closely for a number of years now.
Great.
And if you ask me if you would have asked me this question a couple of years ago, I would have said that the market is indeed maturing, that we see more and more investors. Competition is more substantial than it was a number of years ago. Now, in the last years, in a sort of funny way, competition on the venture market has become less substantial because of AI. Funds from London and Berlin who are also looking at Bucharest, they are also looking at Southeast Europe, they now have a ton of opportunities at home. So they fish more in the local market and they spend less time in CE. So from this point of view, we see sort of a stagnating venture market, but it's not because we don't have exciting companies. I mean, 11 Labs, which is one of the most exciting companies in Europe, maybe the most exciting one, is a Poland, Warsaw plus London-based company. So we see these exciting opportunities, but for natural reasons, there is just less capital going into them. And we've done a bit of research on the difference of capital between Western and Eastern Europe. And if you report it to the number of ICT specialists, Eastern Europe has 10x less capital per capita for every ICT specialist than Western Europe. Like there is an incredible wide space of opportunity for the next decades. So we see, from this point of view, we see more opportunity. We see a market that will continue to evolve positively for the next period of time. In terms of maturity, I think we can refer more, we can see a maturity in the level of, let's say, the knowledge and the founder experience, the definitely significant more know-how when it comes to product innovation, to sales, to commercialization, but capital is still largely missing, so there is something to be done on this side.
Okay, great. Thank you. Now, Michalis, today, what is the most critical challenge facing early-stage startups in this region? Is it access to capital, or is it acquiring the first customers, commercialization, or what it is? What do you think?
There is no answer to fit all. First of all, if we start from Europe, we will see, especially in the region, the last 10 years, we saw from public expenditure and mixed with European tools like structural tools, RRF, to create this ecosystem. Imagine in Greece, now we have 42 funds under the backup of HDBI. The last 6 years, now handling total assets of 3 billion. Before that, there was no money on the table. So but this is an immature ecosystem yet. It's a full ecosystem from pre-seed to growth capital, but not mature yet. And this is one of the things. Also, there is a funding gap still. Tickets to startups that they can 5 to 10 millions, they're not on the table. There we're talking about growth companies and SMEs, but they're not clear on the table. They're looking from US venture capitals to attract money. Also, there is the AI challenge. As VCs now, we strongly face the difficulty to identify. It's the first period that's so fast to create an MVP and so difficult to identify if this AP will have any relevance 18 months from now or 8 months from now. So that is another challenge that makes, especially in tech. And of course, when you're talking about regional scaling, we see that gradually we are collaborating more. We see co-investment processes. And we try to explore co-investment opportunities. But still, you know, the growth, the DNA lies on the founder at the end of the day. If a company can grow and succeed irrespectively of the difficulties, the DNA lies on the DNA of the founder makes the whole difference. And so there are a lot of challenges, and especially in EU countries regarding commercialization that you asked. I believe that although we have very good talent, research talent and tech talent, they've been a bit lazy, with quotation or without quotation marks, in the sense that because of the Horizon programs, the EU research programs, although they create leading technology and leading solutions in several sectors, they don't go through the commercialization path.
Okay, great. Thank you for the great answer. Now, coming back to Arcida, I would like to shift slightly from ecosystem opportunities to the realities and misconceptions investors often encounter with. So, Arcida, in your view, what's the most common mistake made by international or regional investors entering this geography for the first time, let's say? What do you think?
I mean, it's difficult to say what is the biggest mistake investors do, but I'd say there's definitely a sense when you come first to these markets that you can borrow a model that has worked in the US or in the Western markets, and you can fully apply it to our region. I think I'd definitely say that is probably mistake number one. I know there is a lot of people that think that one of the biggest issues in entering these markets is valuation expectations and discussions such as mispricing. But you'd be surprised that the mispricing issue here is something which is very different. Most of the funds or the new investors that come here, they overestimate some risks and they underestimate some other risks, which are actually very important. So they come here with the formula of discounting for emerging markets, and then they put a discount on a lot of things, regional issue, macro instability, FX, et cetera, and then they think that they have solved for everything else. The underlying issue in the market, though, is exit. And I would have to say it is one of the issues that are rarely discussed or accounted for when people start to invest in these markets. And for different regions, there are different reasons. So Western Balkans, for example, super thin market, no capital, no public exit potential. The regional game is being played by family-run businesses, so for you to exit, you have to go through a long curve of education. Then you move to Romania, the same issue. The local capital market, very thin, very low liquidity, and so you need to look for potential exits from strategics. Again, a lot of strategics don't have Romania in their key raters, so that's another issue. And I would say this could be also applicable to Turkey, though for different reasons. So exit and trying to have a realistic expectation on the amount of time it takes to exit markets like ours is definitely one key concern. The second one is overestimation of the regional expansion. I mean, people come here and say, okay, there's a 150 million market. I can test, let's say in Romania, I can very quickly expand in Turkey. If anything, for 20 years of investing in these markets, artificial intelligence will not solve for culture. So you need to understand the local culture. You cannot structure, engineer, or price local culture know-how. So, and the issue becomes bigger if you compound the risk. So if you have exit underestimation, plus don't really understand the local culture, don't work with the right counterparties locally, that becomes a real issue, and all of a sudden you have the wrong estimate, the wrong counterparty, you are trying to exit for 5 years, but it takes 8 years. That's a huge impact on your IRR. So my advice would be that the region really needs patient capital. So co-investment with patient capital, such as EBRD or IFC or the likes, is definitely a good strategy, and working with very good local partners is a must-have. It's actually working with local partners that you trust and you've built trust, that have very long experience investing in those markets. It's actually the alpha. It's not the nice-to-have in most equity investments in the region.
That's very true. Thank you. Thank you.
Totally
Akila.
agree about patient capital. There is a clear need about it.
Yeah, that's great. So, Bogdan, this question's for you. Eastern Europe is often known for its very strong talent. So, beyond this engineering capabilities perspective, from your side, what makes founders from region exceptional? What else can you say?
Technical capacity definitely is relevant, and I want to return to that because we are living very interesting times. But first and foremost, apart from technical capacity, I think Eastern European founders have incredible resilience, incredible creativity. They are used to do a lot with very little, and in a creative space as technology, this goes a very long way.
Exactly.
And apart from the technology element, I mean, you know, we have this sort of, I would call it a bit of a myth that CE doesn't have really good people who are, you know, able to sell stuff, to be, you know, commercially savvy. I would fundamentally disagree that if you look at CE, some of the biggest or most of the biggest companies created out of CE do enterprise sales. Like in Romania, we have UiPath, Bitdefender, Druid, FintechOS, FlowX, all of them doing enterprise sales worldwide. And it's the same everywhere in CE, Turkey included. I mean, Turkish people are famous for their commercial skills. But I want to briefly return to the technical part and just add that nowadays we have this string of technical revolutions that are, you know, coming one after the other. All of them, let's say, under the umbrella of AI. There is no better time for technical people to do businesses because they are the ones who can connect technical innovation and business opportunity better than anyone else. So the fact that we have technical skills is actually an incredible advantage for the future.
Exactly. Thank you very much for this great answer. My last question is for you, Michalis. That's a good question. From Turkey's perspective, what will be the most realistic channel for building a stronger investment and entrepreneurship reach with Southeast Europe and Turkey? What do you think? You are a good entrepreneur and an investor. What do you think? What's your idea?
I believe there are 3+1 main factors. First of all, the fastest and more realistic to have a short-term leverage is co-investment. Because by the time a Turkish fund, a Greek fund, and a Serbian fund, they co-invest in the same company, they immediately have a shared interest in making the cross-border story work. Market access, connections, introductions, deal flow sharing. It becomes a business relation even before it becomes a cultural one. So that's clear. But also LP relationship is it's a structural bridge, because it's more transformative, but over a longer period. And this is how we practice it as Elstone Capital with our relationship with Finberg. Because it's not a capital arrangement. It's more than that. It's a relationship that is built on trust. It's a structural bridge between markets, and we build a shared horizon and we align interests. But also quite helpful, but they produce, I would say, less, a weaker deal flow, is the cross-border partnership through acceleration, through programs that they, build organically the links between the several partners. But I believe what is key at the end of the day, it's trust. How you build the trust, because at the end of the day, it's personal networks that create the value. How you share the deal flow, how you exchange the good startup, it's about how this remains the main still way of collaborating. Trust, and this is something that is not built with term sheets. It's built with presence, it's built with shared decisions, and it's what we see today. This is how
exactly.
you get it built.
Thank you, that's a great answer. Thank you for the insights and perspectives. I think today's discussion made it very clear. This region is no longer an emerging conversation in global innovation. It is increasingly becoming part of the core conversation itself. So thank you to our panelists. And thank you all for joining us today. Thank you.